Hello students, hope you will like and understand the content of this video. If you have got any query, please send it through the comment box. If you like smart lectures, please subscribe, follow, like, comment and share our channel. Thank you very much.
Now we will start journal entries. Be careful, I'm starting these practicals, journal entries, without narration. Narration will be explained at the end of our episodes. Suppose company issues 10,000 shares of rupees 10 each, and the whole money was called in single installment. Means the first and final installment will be for rupees 10. A simple journal entry is when the money is injected into the company or firm as capital, the journal entry is cash account debit to capital. So the same journal entry will be applied here. But be careful. In company, the money is always introduced as capital through bank, not cash. So we cannot use the word cash. We will debit bank account. So it shouldn't be cash account debit, it should be bank account debit to capital. And the second thing, we cannot use the word capital account because the capital of company is always divided into shares. So the money received as capital through shares is called share capital. So the proper journal entry should be bank account debit to share capital because we have received 10 rupees on 10,000 shares. So 10,000 into 10 is equal to 100,000. But be careful, this money of rupees 10 has come with the application. So we must involve share application account. In every installment in company, two journal entries are passed. One journal entry is for receipt and the second journal entry is for transfer. Let me explain how it's happening. This is share application money because first installment is called share application. So the whole of the money is share application money. So the journal entry should be bank account debit to share application. When we receive the money, we have to debit bank account. And you know how much money was received? That was 10,000 into 10 because 10 rupees came to our bank with 10,000 shares application. And immediately a new journal entry of transfer will be passed. And that journal entry will be share application account debit to share capital account. That is 100,000. If you join this entry, if you combine this entry, you will see that share application has been credited, then it has been debited. Means ultimately this account will be cancelled and the net journal entry will come up bank account debit to share capital. It means we will write down two journal entries, one journal entry for receipt and the second journal entry for transfer to capital. And the net journal entry will be bank account debit to share capital. So what we have learned from this journal entry, that in case of company, in every installment, two journal entries will be passed. One for receipt and one for transfer. Suppose company issues 10,000 shares of rupees 10 each. The money was called in two installments of 3 and 7. You know, there are two installments. I have already explained you two journal entries will be passed for each installments. It means in this situation, we have to pass four journal entries. Two journal entries for share application and second journal entry for share allotment. So first of all, let us pass the journal entry for share application. First of all, journal entry for receipt is passed, and that is bank account debit to share application account. 10,000 into 3, 30,000, and then share application account debit to share capital account. That is 10,000 into 3, 30,000 rupees. So first journal entry is for receipt and the second journal entry is for transfer. Now we have to pass two journal entries for the allotment. Be careful. At the time of application, first of all, receipt journal entry is passed and then transfer entry. But in further installments, I mean to say allotment, first call, second call, third call, first transfer entry will be passed and then receipt entry will be passed. It might be a bit tricky for you, but the explanation of this thing will be given at the end of this chapter. So I'm going to pass journal entries for allotment, means two journal entries. First of all, share allotment to share capital and then bank account debit to share allotment. And the amounts will be 10,000 into 7, 70,000 for both of them. So in this way, you must have noticed in receipt entry, bank account is debited, and in transfer entry, share capital account is credited. Suppose company issues 10,000 shares of rupees 10 each. The money was called in three installments, 3 plus 5 plus 2. So first installment is for 3, second is for 5, and third is for 2. So this money has been called in three installments, so 6 journal entries will be passed. At the time of application, first receipt, then transfer. And in further installments, I mean to say allotment and share first call, first transfer entry will be passed and then receipt entry will be passed. So let's start the journal entries. Bank account debit to share application account debit to share capital account. And the amounts will be 10,000 into 3, 30,000 rupees, because there are 10,000 shares and 3 rupees is the application money. So in this situation, at the time of application, first receipt entry was passed and then transfer. Now let's move to allotment. First transfer entry and then receipt entry. So share allotment account debit to share capital account, bank account debit to share allotment account. And the amounts will be 10,000 into 5, 50,000 rupees for both of them. Now this is the turn of first and final call. This is the final installment, last installment. So we are using the term final. So it is share first and final call. So first transfer entry and then receipt entry. So the journal entries will be share first and final call account debit to share capital account, then bank account debit to share first and final call account. The amounts will be 10,000 into 2, 20,000 rupees for both of them. In all these journal entries, I am using the term share capital, and we don't know whether these are equity shares or preference shares. So if the question says that equity shares were issued, then always you have to use to equity share capital, equity share allotment. Otherwise, if the question is not mentioning anything about the class of shares, so you can use the term simply share capital.